What is your mortgage broker charging you for? Are they worth the fee? The mortgage process can be stressful, it can be time consuming, and it can be quite expensive. That's why a good mortgage broker is worth probably triple their fee as far as what it can save you in time and in money. And a good mortgage broker will save you both. In order to work with a mortgage broker and get the most out of the mortgage broker, you're going to need to do your part. So let me share a few strategies that aren't really secrets, but a few strategies to get the most out of your mortgage broker. Now, what I tell you might be quite surprising. I've been working in finance for over 30 years, both in the US and in the UK, and I know that a good broker is hard to find. And when you do find a good broker, it's important that you do your part. It's important that you share information with them. You're open, you're honest, you give them the things that they need, the documents that they request, and that you do it in a timely manner. My name is Anthony Lindsay, and I've been in finance, as I said, for over 30 years, and I know a thing or two. I'm not one of these brokers that's just been doing mortgages. I'm someone that's done collections. I've done a lot of things. So you're going to get a wealth of information. So I'm going to tell you what your broker should be doing, and the best way of doing that is by telling you what my process is. So the first thing that I'm going to do with you is I'm going to do an initial assessment. This only takes about 15 minutes because despite what people might make you believe, it's not rocket science. It's not a dark art. It's simple math. It comes down to three things that I call SID: credit, income, and deposit. So what I'm going to do is I'm going to ask you a few simple questions in order to be able to understand what you're trying to accomplish and where you are currently. Because if I'm not going to be able to help you, I need to know that quickly, that I don't waste your time or my time. So the first thing I'll ask you is, do you have a house price in mind? And this is super important that you have a figure in mind, because we don't want to go after a number and then you go and look and you find out that you and your family cannot get a house that you'd want to live in at that price. So I'll ask you what price range you're looking in. Remember, people always buy at the top of their price range. So if you tell me 450 to 500, I'm going after 500 because I don't want to go after 450 and then you come back and say, I couldn't find a house for 450. The next thing that I need to know is do you have any credit issues, late payments, missed payments? I'm not worried about your credit score. I'm really more looking at your credit profile, how you pay your bills, which does relate somewhat to your credit score, but it's really more about understanding if you have missed payments, late payments, CCJs or defaults within the last 6, 12, 24 months. I'll also need to know your salary, and everything that I'm saying is for both parties. If it's a joint application, if there are multiple people on the application, everything that I need to know will be for each person. And then I need to know how much you have for a deposit. Not a fictitious number, not a percentage. I need to know the exact pound amount because you will need to provide proof of deposit with a bank statement. So make sure you're giving me a figure that is something that you can prove. The first part of the process, once we get that information, will be the review of a mortgage illustration. So I'll take the figures that you've given me, I will crunch the numbers, I will find a deal that fits what you're trying to do. And if I'm honest, the first part of the process is where things usually go astray. Because if the client's not being open, honest, and exact with me, then everything else is going to be off. So if you say you're going after a house that's 450 and you're really going after a house that's 700,000, everything else is going to fall over. If you say your monthly budget, when I ask you, your monthly budget for repayments is £2,000 a month, and it's actually £800 a month, we're going to have problems. So be open, honest, straightforward with your broker. In this case, hopefully, it's me. So many brokers do not do a full mortgage illustration prior to getting paid. Now, at our firm, we do that because most people have never even seen a mortgage illustration, even people that have mortgages, because a lot of brokers don't do it. But I think it's important for you to understand every single component of that mortgage illustration: interest rate, payments, what is non-refundable, how the payments are applied. Now, in the first instance, this is just an illustration. It may not be the product that you end up with, but it will give us a feel for if we're on the right track. If you've said you wanted a 2-year fixed, if you've said you wanted a variable rate, we will go through all of that. And this is the time for you to revisit that, change it, and ask questions. So that's the first step. Next, we will do a compliance review and permission to proceed to DIP. DIP is decision in principle or agreement in principle or mortgage in principle. So what we'll do is we'll take all of the information that you've given us. We'll look at your bank statements, your pay slips. We'll look at your credit report, all of the documents. We'll sanity check them. We'll make sure that everything's spelled correctly. The date of birth is correct. Middle name is on there if you have a middle name. My compliance team is going to look that over and make sure that this agreement in principle that we're going to get for you will convert into a mortgage offer, because an agreement in principle that does not produce a mortgage offer is pointless. It's a waste of time and it's a waste of money. Why? Because if the agreement in principle does not convert into a mortgage offer, you won't be able to buy the property. I'd say 70% of all of my clients come to me and say, I went to a broker or I went to my bank and they got me an agreement in principle. And when I went to purchase 3 or 4 months later, they told me that the bank won't lend. Won't happen with me because we do all of our due diligence up front. This may be something that puts people off because a lot of brokers will just say, yeah, name, phone number, email address, salary, I'll get you an agreement in principle. We don't do that. We want to make sure that that agreement in principle will produce a mortgage offer. So we'll go through everything, sanity check it. Once we know that it will produce a mortgage offer, that's when you pay. So we've already done 90% of the work before you pay the application fee. Property search. Now, I offer a free negotiation service. For some reason, people who are accountants and IT people and plumbers and doctors and all these professions think they can do the negotiation as well as I can. Well, if you choose to do that, it's fine. But why not let me, a professional, someone who's been doing this for over 30 years, negotiate the purchase for you? It's in my best interest to get you the deal quickly and get you the very best deal. So while you're at work, while you're taking care of your family, I can be negotiating the deal for you. You don't have to let me do it, but if I do it, in most cases, I'm going to save you a couple of £1,000 and potentially, depending on the house price, maybe tens of thousands of pounds. Once we have an offer agreed, we will do a full mortgage application. Now, this is where things start to get for real. Now, we've already gone through a mortgage illustration with you. We'll now do the full mortgage application. This is when we submit all of your documents to the lender. So your pay slips, we'll start to submit your bank statements. They'll do the credit checks, etc. You may need to pay a valuation fee at this point, but this is when I will submit formally the application to the lender. It doesn't take long to do because I'll have most of your information already, but this is a part of the process. Next up, we're going to be looking at the valuation, and there's 3 things that can happen with the valuation. So the valuation is the bank looking at the property either by a desktop valuation or a drive-by valuation. We can't guarantee what kind of valuation it will be, but they'll look at that specific property now and they'll say, this is what we think it is worth. Now, it's what the bank thinks it's worth that counts. It's not what the offer that was accepted. It's not what you think, because the bank is lending you the money. So it can come in below value, meaning you thought it was worth 400,000 and the offer was accepted for 400,000, but the bank thinks it's worth less. That's not good, because you're going to need to make up the shortfall either with a higher loan or a higher deposit. It could come in at value. I'll be honest with you, if I've done the negotiation, 9 times out of 10, it's going to come in at value because I'll negotiate
really hard for you to get you the very best price. If it comes in at value, no problem. If it comes in above value, then bonus. That means you're buying a property that is valued more than you're paying for it. So the valuation outcomes are one of three things. 9 times out of 10, it will come in at value. Next is the underwriting and full mortgage application assessment. This is when the lender is reviewing all of the documents that I've sent over during the full mortgage application. This is when they're going to scrutinize everything. I will have already collected most of the documents from you, but we never collect anything that we don't need. So it may be, especially if you are on a skilled worker visa or there's something unique about you or your case, they may ask for additional documents. They may ask for additional months worth of pay slips or bank statements. If there's anyone over the age of 18 in the property, they'll ask for a deed of consent. That means that that person is aware that you are entering into a mortgage with a lender. Now, this should result in a full mortgage offer because we've already done the due diligence. We've already had the conversations. Next up, we're going to be looking at the handover to the solicitor. At the very beginning of the process, I will introduce you to 2 solicitors. One will be a recommendation. The other one will be a backup. You still need to do your due diligence. We work with certain solicitors. We work with solicitors that we know are fast, are responsive, and will not delay your deal. Do not go for a cheap solicitor. Always go on service. And if you take our recommendation, it will mean we have a relationship with them. So if anything goes wrong, we can pick up the phone and we can make that call. So we'll hand over to the solicitor. The solicitor will take over from there. Remember, the solicitor works for you, so you want to have that conversation and that relationship with the solicitor, because from here on, a lot of the communication will be with the lender to the solicitor, your solicitor to the seller's solicitor. So most of my job as a broker is done at this point, but I will continue to support you. I'll also be having a more in-depth conversation with you about protection and insurance. Remember, if you're buying a house, building insurance is required. The lender will not release the funds on the mortgage without proof of building insurance. So it's a required element. We will also make sure that your family is protected. So we will have a conversation with you about life cover, income protection, and critical illness cover. I have quite a few videos about all of these things. Remember, don't tell me you can't afford it. Don't tell me insurance doesn't pay out. Don't go with those knee-jerk reactions because you don't want to spend the money. Life happens. At some point, every one of us will die. What you don't want is, especially if you're in a joint mortgage, for one of you to pass away and the other person, instead of being able to grieve, is trying to figure out how they're going to keep the home, keep the roof over the head, take care of the kids. So life cover, pretty simple. Most people understand it. Income protection, it essentially picks up where your sick pay leaves off. No employee is going to pay you indefinitely if you're off work sick for a long period of time. They like you, they may care about you, but they're not going to pay you if you're not showing up for work. So income protection will pick up at that point. Critical illness, I'm super passionate about it. If you know me, if you've ever seen me speak at an event, you know I talk about it a lot. Unfortunately, I've lost both my grandmother and my grandfather to cancer. I lost my father to cancer. I've lost close friends to cancer. Depending on what statistics you look at, either 1 in 3 or 1 in 4 people will have issues around cancer. The great thing is, if you are in that situation and you're prepared, you can focus on getting better. Because if you get the right policy, the policy will pay your mortgage off in full upon diagnosis. Upon diagnosis, in most cases, you need to live for at least an additional 4 weeks, but it will pay out. So you can focus on medical care. You can focus on getting better. You're not worried about how the mortgage is going to be paid. Now, we're almost there at this point because the solicitors are talking to each other, and the process takes 4 to 6 months in most cases. So it's possible that new products may come on the market, or the Bank of England may reduce rates, or you may be eligible for a product that is similar to yours in the same class that you qualify for that is cheaper. You're protected against interest rates increases, but if rates go down, I will contact you and get your permission to put you on the lower rate. But please, please, please keep in mind, just because the Bank of England has reduced rates, or because you see on the news or you see in an email that rates have gone down, it doesn't necessarily mean that the product that you have has gone down. But I will be proactive, and I'll make sure that I'm always keeping in contact with you, even after we've handed over to the solicitor. My name is Anthony Lindsay, and hopefully everything that I've explained to you is what your broker is doing for you. I'd also like to point out that when we go through the mortgage process at the very beginning, most people don't listen to most of the stuff. Always listen to what your broker is telling you. If they're telling you something's important, definitely put that on the sticky side of your head. And always, 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 always be responsive. You will delay the deal. And remember, a mortgage is only as fast as the slowest person. Check your email, respond to your broker. If they're requesting something, provide it as requested. If they ask for the last 3 months bank statements or the last 3 months pay slips, they mean the last 3 months, the most recent 3 months. If you're unsure about something and you're dealing with me, you can always pick up the phone and call, because I'm always here to help. My name is Anthony Lindsay. I've been a mortgage broker for many, many years, and I've been in finance for over 30 years. I'd love to work with you. I specialize in helping first-time buyers and people with credit issues. And it's been great talking to you, and hopefully you got something out of this video. You can hear the ice cream van in the background. It's a beautiful sunny day, and my details will be in the link.